time for the Personal Finance Corner, and today we're going to put the spotlight on a fund that has truly been an outperformer in tough times, Faye.
Absolutely, Sandeep. And normally in a time like this, in a market like this, it's the mid and small cap sectors that get beaten up the most, which is what we've seen. But interestingly, we found one very interesting small cap fund that's done surprisingly well. Now, like we know, high beta stocks, mid and small cap bands, are the ones that get the most volatility, especially in a market like this. Now, over the last 1 year, the BSE Mid Cap Index is down 5%. The BSE Small Caps Index is down 16%. Now, the best performing mid and small cap fund in the last 1 year, Franklin Indian Small Companies, is up 17%. Let's bring in Dhirendra Kumar and find out what this fund is doing right, and if this is a fund we should be adding to our portfolios. Dhirendra, thank you so much for joining us on this segment. Franklin India's Smaller Companies Fund, small fund, less than 300 crore rupees. It turned open-ended only in 2010. What is this fund doing right, and is this a fund we should add to our portfolios?
Yes, it's been a very impressive fund, and it has not changed its track. Just that, it has been lucky of late, many of its picks fructifying. But the orientation is very straightforward. It has none of the, despite being a small cap fund, it has none of the unknown names in its portfolio. A very high quality portfolio, because when we look at the financials of the underlying companies, the portfolio is spread over 40 companies. So one very nice diversification. None of the exposure go beyond 3-4%, and known names, quality companies. That focus being consistent, this fund has just been, been able to duck the whole, the kind of carnage we saw in mid caps. This fund was able to survive that very nicely, and that is what shows right now.
Well, Dhirendra, for those of our viewers who want to invest in mid and small caps at this point, which means that they want those high beta returns when this market does turn around, there are two ways to go. Either we pick something like the Franklin India Smaller Companies, which has shown good returns over the last 1 year, or over the last 3 or 5 years, you have the SBI Emerging Business or the ICICI Prudential Discovery Funds. What would you recommend? Should we be looking at long-term returns or short-term returns at this point?
I would say that look for consistent performance, and from that standpoint, the three funds are actually following a very different strategy, though they all fall in the same category. Discovery is a value fund, so it will benefit if the overall market turns around, and it will benefit substantially as well. Here, this smaller company fund is likely to be, it's a growth it's a high growth companies, and it will be more volatile. Looking at emerging business, that is an opportunistic fund. That fund takes huge risks, and it has been right in recent years. So till the fund manager's winning streak continues, I think that is worth riding. So they are all good funds. They are all very impressive funds through the lean times. But I would say if you are a conservative investor, consider the ICICI Prudential Discovery. If you are looking for high growth, then consider one of these two funds.
All right, one of those two funds there on your screen. We have a question from one of our viewers, Dhirendra. Vinod has written in. He's been investing in the DSP BlackRock Small and Mid Cap Fund and the Sundaram Smile Fund. Now, he's investing in these funds along with his other large cap funds, but he's concerned about the returns they're giving him. He's unimpressed right now, and he wants to know if he should pull that money out. Now, these are both reasonably impressive funds. Would you recommend he continues these investments?
I would urge him to continue with these investments, because these investments do reward for all the test of patience in a rising market, and for that you must have the time frame. And last 3-4 years it has been very difficult for these funds to deliver any meaningful return, but that doesn't mean that they are not good funds. They will come to life at their own time, and so if you don't have the time on your side, if you need your money in 1.5 years, maybe you should get out of these funds. But if you are just getting impatient because these funds have not performed, it may not be an opportune time to get out.
All right, so if you have the time, stay invested in these funds. Dhirendra, thank you so much for joining us. We look forward to having you back again tomorrow. Email ID is on your screen if you'd like to send a question to Dhirendra Kumar. For now, it's back to Sandeep and Aisha.
Thanks for that update, Faye. As always, that's the Personal Finance Corner on the Markets at Lunch.